By now, we are probably one of the most profitable communities this year here on YouTube. I gave you guys silver between $22 and $24, and lots of our picks are several 100% up by now. Just open Pantera chart if you don't believe me and see it for yourself. So you don't have to only be in the world of meme coins in order to make life-changing gain. And moreover, I start seeing a lot of breakout traders drawing their diagonal lines right now and trying to chase silver from $29 to $34. Amazing. But we've been here before, and let's recognize, celebrate, validate ourselves, and see what's gonna come from here. Good morning, good afternoon, everyone. As always, my name is Russ. For those who are still asking me where is Nick and who I am working together with Nick on the DataDash project, and we are together observing multiple various asset classes. So I'm always happy to bring the new narrative to you, the new reversal, the new momentum that's gonna bring us into the life-changing results, and that's what's happening right now in the world of silver. There are many more asset classes that we're gonna cover on the course of the next few months, in particular lumber, in particular copper, in particular lithium, and many more. But today, let's see where the economy is right now, because I see on one side, I see an immense bullishness. I see people are celebrating the precious metal breakout. I see also banks are being historically at an immense unrealized profit and loss, and they are still holding their position. On the other side, I'm seeing people are really signalizing that the economy is not doing well, and I believe so too. That's the reason why, if you've seen my videos in the past, you've seen I started to short Apple, I started to short Meta. I openly said I'm gonna increase my Meta short to 7-digit amount, and we'll see from there. Everything I do, moreover, when it comes, of course, to the precious metal markets, gold and silver, but also to crypto trades, I showcase in our Telegram alert group, the one that you see highlighted. We prepared our limit entries for Bitcoin in case of the liquidation event. I start seeing spot is not leading here anymore, and the futures are trying to basically keep the price where is it, but we just have a lot of open interest increase without any significant move. On the other perspective, from the other perspective, we are of course still long our miners. And with all that said, I want to tell you guys that this is the moment for me to start paying attention in other equities. I'm talking now about not just the indices like S&P 500, NASDAQ, Russell 2000. I'm also talking about our particular good individual plays, something that we have been riding this year, made immense number of percent gains. The stocks like Robinhood, for example, and others. I am starting to be much more cautious because everything, and by everything I mean the broader markets, vis-a-vis the stock market itself, for example, housing market, are signalizing me the potential danger here. So for example, if you're gonna look at NAHB, or in other words, it's Wells Fargo Housing Market Index, it's often actually called HMI, is designed to gauge and track the pulse of the single-family housing market. So the HMI is based on monthly surveys of single-family builders who are asked to rate 3 specific conditions of the housing market. They are asked about present sales of new single-family homes. They're asked about expected sales of single-family homes for the upcoming 6 months. And they also showcase the traffic of prospective buyers of new single-family homes. And what's so interesting about this index is that very often this index is actually helping us to anticipate the recession. And if you see, this index has peaked in around 2005, 2006, a couple of years prior to the 2008 mortgage crisis and great financial crisis. And I think this chart looks quite similar right now. I believe for a couple more metrics that I'm just going to show to you in a second, that this 2021 spike has been the top. And right now we are actually very close in terms of timing to the upcoming decline, upcoming more severe drop, as you have seen here in 2008 We dropped way below 10. So there is still the room to go, despite we are right now at around 35, 36. Well, I'm considering also other metrics here, not just this Wells Fargo index. I am looking on a broader set of data, and I see the following picture. The housing prices year on year are going down. It means the people are willing to sell their house, even at a lower price, just to liquidate an asset. And of course, that's understandable because the mortgage rates are starting to rebound again. So that makes the entire acquisition price of the house higher for the newly buyers, especially if they're not sitting on the cash position. Or maybe if they're sitting in a cash position, they're considering that their cash can bring more money elsewhere, for example, as well in a precious market world. Yeah, there's more and more people. Of course, they're not always so smart. They're not gonna write silver wave or platinum wave. Some of those are just the retail investors, but they already hype up this gold. So they're gonna actually come here and buy the gold at 2,750, expecting that this is the beginning of the bull run. And that's also what happens with an existing home sale prices, right? As home sale prices are going down for the same reason, that doesn't look good to me. The trend is your friend, so you have to ride the trend. You have to not fight it. There's no need to see the reversal here. First of all, follow the trend. And when the trend change in direction will be reconfirmed, that we can conclude the reversal. But there's no need to run and anticipate reversal in a trending market. And the trend is clearly down. You see, we can look from different perspectives. Various metrics are bringing us pretty much the same picture. And this is also why you can see here that mortgage applications are getting severely down. Last 3 months, we are in the negative territory, and the pending home sales growth year on year is also down. So that's the reason why actually, total housing inventory has been going up right now to roughly about 1.3 million houses are available in the market in the United States only. Of course, I'm looking primarily on the United States as the indicator for the broader market. But you see my picture, and what it means. It means the economy is not really doing as well as the stock market is telling us it is. And that's the reason why I am, as I told you, I'm short Meta. I'm gonna increase my short up to 1 million. I'm short Apple, everything I've been sharing in our Telegram group. So I'm gonna keep the link in the description down below. It's free for Nick's newsletter subscribers. I'm doing my job completely out of any charge, just sharing the narrative with you guys. In a way, I feel this year especially I made it. So I just hope to keep more people from being burned out, from following the fake gurus and influencers that are shooting you certain meme coins. You cannot compare your gains, for example, in a particular asset class like silver miners. Some of the people already 50% above, sometimes 80% above the entry point. You cannot compare it to some meme coin that made 5x, 10x, because the question is how much money you are willing to put in there. Yeah, maybe you are willing to put $10,000, $30,000. Are you willing to put there millions like I do? Because I believe that this asset class is fundamentally undervalued, and that has a huge industrial use, which is way beyond fear, which is way beyond what gold is offering, and so on and so forth. Yeah, so also be mindful about not just the gains, but the potential exposure that you can have to this particular asset class. And now, while we already start speaking about precious metals, I wanted to show you also this picture because I screenshotted it from Twitter, and it actually shows us what we have seen in the COT data. And COT data, you remember, guys, I am sharing with you every couple of weeks. We see that those huge shorts that banks, and by banks I mean actually smart money, not the funds, but banks that have actually exposure to the insights around the metal market, and they have been suppressing metal market historically for a number of years. They are probably right now at the verge of losing their ability to affect the markets anymore, just because this demand that is driving by the East. You've seen yesterday what happened in Russia, for example. BRICS is extended right now up to 20 countries. So obviously all these countries are very heavy commodity countries, and they are having their own agenda, which might not be overlapping with the Western world agenda. So what China, India, South Africa, Russia, and so on are doing right now might definitely make those banks start to close their underwater positions if those huge And I'm really meaning huge here, guys. We're talking here about hundreds of billions of dollars of banks being underwater. And they're facing the unrealized losses 7 times higher than they had during the 2008 crisis. That can be a beginning of the severe melt up, and I want you to be ready for that. This is just a visual representation of what I've been just telling you. So you see how incredibly huge those unrealized losses are comparing to anything we've seen in the past, right? We never passed the point of 100 billion, and right now we are almost at 700 billion. And just looking at our COT data, yeah, so the yellow arrow or red line represents the price, and you see the amount of shorts have been piling in and in and in. I'm not gonna spend much more time on there. For everyone following me on Telegram, we already know that. For those who know, just to emphasize you how COT data is organized, it is separating fans, which is dump money in this case, and the banks, which are the smart money. So we try to follow the smart money in our moves, but that can be one of the times that despite cartel is trying to suppress the price, and that's exactly what happened with them trying to suppress gold at around 2,500. It worked 8 times, it didn't work at the 9th time, and then when someone is holding a huge short position and then the price goes against them for whatever reason, simply because, for example, the demand coming from China and India, that can already squeeze the prices up, those shorts need to cover. So what happens when the short is covering? Short is closing, and for every short there's a long. So if someone is closing the short, it's an equivalent of opening the long. It's basically closing their short or opening the long. It's the same direction for the market. So market starts propelling even further. So if market was already going up and now shorts are starting to close because they're underwater, it adds an extra fuel to that move. So you have to understand the idea behind short squeeze, right? So some are offline, underwater position that cannot handle anymore those losses are starting to capitulate. That capitulation, that is exactly what we are starting to see in silver right now. And that's the reason why silver chart starts to look a little bit overextended here. I, of course, am aware that this can definitely spike us all the way to 38, but we are in the middle of the move. And on top of that, if I'm gonna look at SILJ, we are starting to get into overextended territory in the short term. Guys, it's very important. When I say we're overextended, it doesn't mean that this is the top and that's now we're gonna bottom and come back into the range. No, that's not how it's gonna work. But we might have the certain retrace in order to burn the RSI and continue from here. And every time you're in doubt, shall I take the profits? Because I'm already 50% up on my minor picks. Thank you, Russ, for those minor picks, but I think 50% is a good money. You open the weekly or you open monthly charts, and then you're starting to see where we are. So as you know, I'm not at all a fan of SILJ. I think there's a lot of companies there that should absolutely not be included there. I spoke to those guys who are building those ETFs. I know them. I understand that their business model has nothing to do with your making gains, and it's normal because they're making their money from the BPS that the ETF is charging. So if they're charging 90 BPS, all they want to do is to have a certain narrative around this ETF. They're absolutely not incentivized for this ETF to go up and down. That's exactly the reason why we also have so many leverage ETFs, like an UGT, for example, that copies the gold miner direction daily. But this is not an ETF you can just buy and forget, right? Because of what we discussed, because of the backwardation and contango effect, because it is not something that is ever going to bounce back to where it was. Of course, that would be just simply impossible, those several 1,000% moves. But some people are forgetting that they should not hold those ETFs for long. And for example, they are bullish on natural gas and they're bullish on gold. But once they start using and having leverage ETF exposure, then unfortunately, despite they copy the move really well, they understand the direction of the move very well, they're getting burned out. So I said it already in the past, but I want to repeat it again because I've seen people especially people who don't have enough of liquidity exposure, they want to use leverage ETFs. And for those reasons, I've been telling you guys, it is much better, much better if you just buy the LEAPs. A LEAP, you can Google it, it's a long-term call contract. So your leaps can be facing 2025, end of 25, or even to be more safe, 26. So if we are, I'm coming back now to silver chart, if we are understanding that 34, 35, 36, 38 is just the beginning of our move, I would say in 24 months time, it's very likely that we're gonna be at $50. You can imagine that silver just after especially such a long consolidation here, we've been consolidating, guys, for almost half a year, like 150 days. Longer is the consolidation, more expensive is the breakout. So you think from those levels we can't go another 50, 60%? Or please, don't tell me that. We absolutely can. And having exposure to calls that you can comfortably start selling in 6 to 12 months from now would allow you to withstand all the volatility and fluctuations that we're gonna have here, because yes, it's true, part of your option value will be burned by theta, which is the time decay component, and it's also gonna be burned, of course, if price goes down. But then in the long run, if you are humble on your strike, please just don't pick up SLV as the silver trust around which you can have your leaps. Please just don't pick up the value that's going to be 63, for example, because despite they're going to look cheap, it might never come to this zone. So yeah, you can sell them, but like very quick, just try to pick up something humbler, like try to pick up either something which is already in money. That will be even more safer move. They are something around, let's say 30. Not right now, but once we drop down towards 30, or you pick up something humbly, like tiny bit out of the money, something around 35, and then you actually ride it into 45, and that's actually when they are becoming in the money, and that's where you make more money through so-called moneyness of the option. We're not going to go into the Greeks right now, because it's going to take several separate videos to explain to you how options work, but I wanted to still give you this update from two perspectives. More unhealthy we're gonna look in the housing market, more unhealthy we're gonna look, especially prior to elections, in the equity markets. More liquidity will be created out of thin air to make things look well, and more smart money would reposition those things. Obviously they're not gonna sit on Apple. It's clear that Warren Buffett and other best investors around the world are not excited about tech stocks of this price. So if you're still chasing the next AI narrative in the next coming months, it's probably the time to re-question yourself and to understand a little bit of the broader picture, the global capital flows, understanding the growth cycle and the inflation cycle. Understand that we are most probably are not going to end up in the Goldilocks environment, because inflation is not going to go down. We're going to have the second wave of inflation, and that's the reason why here on the channel we're going to speak more of the assets like lumber. And I'm sorry for people who only came here for crypto. I am, guys, giving you whatever makes money, and I have a proven track record of that. If you're not happy, switch off the channel and don't get frustrated. But I'm here to help you make money. I'm not here to tell you what you want to hear. So with all that said, I wish you an amazing continuation of the week. Please give me a like. If you want more people to get exposed, for me, it's a life-changing gains. I want more people to have an access to that. This opportunity might not come in the next 20 years. Let's be humble and aware about it. Those things are happening, and that's the reason why I've been into those markets since 2020, because I knew that's going to happen, but I didn't know exactly when Federal Reserve is going to start cutting this unprecedented, this criminal rate hike that they initiated post-COVID, when they initiated the criminal quantitative easing. Everything is not happening without a reason. We are living through the biggest redistribution of capital, through the biggest increase in inequality gap. And if you can help the loved ones and your families to go through those periods with more awareness and better results, then I know I'm doing something good for the world. With all that said, much love, and I see you soon.